Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 9th of December 2016 and we're commenting additionally to our video produced on the 4th of December entitled Why Silver May Outshine Gold in 2017. Now before we do that, we wish to point out at this stage we are not saying that silver is on an upward price trajectory right now. Certainly not, at least until we have seen what the Fed does next week and the forward guidance it issues, if any. What we are saying, though, is that despite our view back in 2015 that perhaps gold was the better purchase decision short term then, the situation may in fact change over the coming 12 to 24 months. We have already stated that China has begun curbing gold imports, and that India too has done this in the past and may very well do so again. It is India we now wish to focus on a little more, and hopefully you will see why. According to the GFMS Gold Survey 2016, India is the world's largest consumer of gold jewellery at nearly 700 tonnes the previous year. However, it mines less than 2 tonnes of gold a year. This means India must import gold worth in excess of $25 billion each year, pushing up its current account deficit and reducing the value of the rupee. In 2011, Australian investment bank Macquarie estimated that 78% of India's household savings were held in gold, and this presents a problem for the economy, in that by building up savings in gold rather than deposits in a bank creates a permanent drag on India's growth, as these savings do not increase the available funds for lending within the banking system. One reason it is so difficult to put this gold to work as investment capital is that 79% of it is bought as jewellery rather than bars or coins. Last year, Prime Minister Narendra Modi's government introduced a sovereign gold bond scheme which allowed gold holders to swap their gold for an interest-bearing bond. At the end of the bond's life, investors would effectively be returned the same amount of gold. This has proven to be a spectacular failure, for as of November 2016, only 14 tonnes of gold has been subscribed, compared with an estimated privately held gold stock of some 20,000 tonnes. Following the recent import tax hikes for gold, 2015 saw Indian silver imports grow to almost 8,000 tonnes, 14% up on the previous 2014 record. At the same time, demand for gold jewellery, as reported by the World Gold Council, was down 30% for the 12 months to the end of September 2016. This suggests that there is a substitution effect between gold and silver. Although gold makes up the vast majority of Indian jewellery sales, the graph shows a 600% growth in silver jewellery demand in India during the past 10 years, relative to marginal growth of only 25% in gold jewellery demand. We should not forget either that there are other substitutes, such as platinum, for example, but the evidence suggests that it is silver which has proven to be in greater demand when gold is not available or too expensive. It's worth bearing in mind that, as already mentioned, the Indian gold jewellery market in 2015 was worth 25 billion US dollars, while the total world silver jewellery market was worth only $3.5 billion. So needless to say that any significant swap from India's buying habits from gold to silver could actually have a profound effect on silver's price, until at least their imports are restricted or taxed further. So those of you who have purchased silver in the past and are holding on to a loss, we are saying don't despair. Silver will have its day. It may not be today or tomorrow, but industrial trends such as solar panels, medicines and technology, together with curbs and restrictions placed by governments on gold, will eventually alter this imbalance between the favoured gold and poorer cousin silver. It may take some time. However, we are confident that taking a long-term view, both metals will have proven to have been worth accumulating, and silver could indeed prove most advantageous to all, but especially younger people who have the opportunity to save it for their retirement. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.